Hey guys, welcome back to another week of fundamental analysis. I am back on the camera. For the past, three and a half months, I've been profitable, consistently profitable, using my fundamental analysis approach. So I am confident in my trading abilities now. I am finally out of just risking, 0.01 lot size. I'm going to start increasing my account size for the rest of 2024. I will be risking a flat 300 AUD, around 200 USD on my trades. And like I said, for the past 3.5 months, I have been green, and I think it's about time I take this social media stuff a bit more serious. This will be the last video on this YouTube account. I'm making another YouTube account where my Instagram, I'm going to be making a TikTok, and an email address for the brand. So it'll be under the name K1 Trading Official, and it's going to be the start of my social media and my trading in hopefully fingers crossed profitable trading. Everything from the past, this YouTube account, I'm going to save it in a hard drive, and look, all this is documented, guys. We've done this from day dot. That is my dog. So like I said, I am still new to this stuff. So join me on this journey. Hopefully when I do become profitable, you guys can have a look at everything, see everything, and follow in my footsteps. And the aim of the game is to create a channel that's very transparent. I've got everything marked out from when I started in November. Around November 2021 is when I started trading crypto. So this is going to be the start of trading influencing, I guess you could say. But yeah, let's get on to the fundamental analysis, which we'll bring up here. Let's go through the 30th of September to the 6th of October. So COT wise, we did have more volume change and bias change back into AUD long side. And this is something I'm going to look at. Again, I'm from Australia, so trading the Aussie against the USD is kind of a no-brainer, knowing the economic conditions of Australia. So we'll go through that one later. You can see volume change increase in NAS and US 30, some volume out of gold and silver, and we'll talk about my gold trade and what I think about this week in terms of trading. Data wise, we had ISM manufacturing services and our NFP week. Now, in terms of manufacturing, we had a slight decrease from expectations. Services was increased again, and that's been a trend for the last couple 4 or 5 months. The thing I want to highlight though is, although manufacturing is 0.4, it's quite not really a big change from the forecasted figure. Look at services PMI, that's a 3.2% change from forecasted to current. I don't have a mean. I haven't calculated a mean yet, which I'm doing with like 4 or 5 years worth of data in the past and averaging that out. But that's a significant number. So ISM PMI for manufacturing, it's cooler than expected, but not by much. But it's definitely hotter for that services PMI, which is good for the US economy. NFP, biggest one, we had 254k from 147k expected, and that is above the average of 72, which I've found, by around 25k. So significant. Jobs was also hotter than expected, and unemployment rate was hotter than expected in terms of it was bullish for the USD. Lower unemployment rate is better for the currency. So you can see this week's data was very hot, very bullish, and that's something we've got to take into consideration trading this week. This week's data, we had Euro President Lagarde, German inflation coming down. It was 1.6% in September from 1.9 in August. Good sign inflation's coming down, more rate cuts likely. The president did state growth this year mainly from expats and government consumption. Domestic demand remained relatively weak, so households spent less. Firms cut business investments, housing investments dropped. So really setting a tone for more rate cuts, trying to stimulate the European economy. USD, we had Chicago PMI, which was a marginal increase only from order backlogs. We had services and manufacturing PMI. So Fior stated that manufacturing PMI demand remains subdued. Companies showed unwillingness to invest in capital due to, we had obviously the rates still being quite high, and as well as the US election uncertainty coming up. For services though, this was a third consecutive month of expansion for services and a big one this month that I noted. We had interest rates in both housing and auto markets steadily declining, meaning there was a slight increase in the loans for housing and auto markets. More borrowing, more printing, less strength in the US dollar. But also on the flip side, stronger, more sales, more money flowing essentially, which is a good sign for the economy. We had Powell and jobs data on that Friday. Powell states that there is unresolved tension between the consumption data, which has been good, versus the employment data, which has been bad. The labor market may give a better real-time picture. So this was Powell on Tuesday, and then we obviously had the jobs data on Friday, which was strong, right? So Powell also states that rate cuts will be dependent on the data. However, if the economy evolves as expected, we would mean 2 more cuts this year to a total of 50 basis points. We've got data. We've got average hourly earnings being hotter than expected, NFP and employment rates being hotter than expected for the USD, which, all these data points suggest that most likely the next rate cut will be 25 basis points instead of the 50 we got previously. So you can see this is overall good for USD, and it does change my gold trade slightly, which we'll talk about towards the end. So no change in this data point. Where are we? Here we go. We've got ISM, manufacturing and services. You can see manufacturing still low. It's been low since 2023. Lower than expected on all the last 1, 2, 3, 4, 5, 6 readings. But you can see services, huge increase in services. So that small marginal change, but services big change. So actually quite bullish for USD based off this data point. We had NFP, again another big increase in NFP, more people on the payroll, which is more bullish for USD. JOLTS, again, higher than expected. Unemployment lower than expected, all very bullish. Next week's data, we have CPI and PPI, so inflationary economic news, which would be interesting now that rates did get decreased. We will have a look and see if that has affected the inflation readings. However, remember in the past economic news, I think it was from Waller, I forgot on top of my head, but they said that instead of inflation being the main thing of concern regarding rate cuts or rate hikes, the focus was employment, which we obviously had today. So we'll see how it goes. Still very keen to see what these numbers are going to be like for inflation. Now bias, how it's changed. So previously, before on my gold bias, I did say poor economic and jobs data along with the big rate cut was a perfect long environment for gold. However, now we had really good jobs data. NFP, JOLTS and unemployment were all for the dollar, as well as indication of better economy, average wage. So I'm no longer putting any more positions on gold long. My long bias is, so I'm neutral on gold currently. Oil, there was war in the Middle East in the last week, which saw a bullish sentiment shift. I was previously bearish on it, just because of poor economic news from the US. But now, yeah, now we've got a neutral bias. Now we're sitting on the sidelines. I don't have a side. I think this is heading, if anything, it's probably going to be more bullish than bearish. So we'll stay on the side. If we can get better news from, more economic data out of USD, I might trade this on the long side. We'll not, who knows? We'll have to see. USD, US 30, good new jobs news, as well as better economic. The average wage was increased. I was long US 30. I'm even more long, and I'm happy to trade US 30 still if we have a setup. Last one, AU. I'm still with this sentiment just because rates are probably the main contributor for whether or not you want to invest in a currency. So Aussie still keeping their rates high compared to the USD. So I'm just going to be slightly cautious for USD, but still very much bullish for AU. All right, now let's head to the charts. You can see, if we go to the daily, that good economic data has pumped USD up. We have a resistance zone that's been broken, so it'll be very interesting to see if we get a bullish sentiment for USD. Now my gold trade, still in both these trades, so you can see I've been in this trade for how long now? About a month now. I've been in this trade. I've added a position about 3 days ago, chopping, right, bouncing along this range here. I've kept my stop here. We're just going to keep that stop there. We can pump up, and if we pump up, I'll move my stop here where it's placed. If we pump down, we get trailed out, right? Not a big deal. This was slightly less position size as well because it was an add to this position here. So we're chilling, that's all good. Oil, I've kept this, I didn't get in a trade for oil, but I've kept this as a potential trade for me. Now the reason why is, this is the reason why I like to wait for confirmation, because we had a nice, if we pop this here, we had a really nice resistance zone here. So we were waiting, right? Let's just put it out for here. We were waiting, price reached in, we could have had a nice entry here, right? With a really tight stop. And even the next candle was nice. But you can see, that's the reason why you wait for price. It just swang bullish because of that news about war in the Middle East. So you can see now we've broken that trend line. There's no longer a 1, 2, 3, 4, 5, 6. That's it. That would have been the 6th touch. It's broken. We're leaving it alone. We'll pop our resistance / support there. We're going to see how it plays out. It could, if we have good news, it could do this, right? So something to look out on. Not trading oil, we'll take that flag off. US 30, happy to trade. We have 2 alerts set. You can see price hasn't, let's get rid of that. Price hasn't reached down both of these points, so we're just chilling. But I am looking to enter on both these zones here. So if it comes here and I see a rejection here, I'll pop my stop position here, stop down here. If it comes a bit lower, I'll pop my stop somewhere here. Okay, that's US 30 and AU. AU we actually triggered into this zone here. Again, I'm waiting for confirmation. If I can see some nice rejection with candles here, we'll get in, stop under here, and we can potentially trade that to the long side. You can see that if we were to go off technicals, there is a big head and shoulders pattern here, so it could be coming down. But again, we trade based off fundamentals, so not a big deal. That is going to be it for the week. just showing you guys, I am starting to do another table for AU, so for the Aussie this time, where we'll be comparing to the fundamentals from the US. So that's still in the works. We'll work over that this month. In terms of what else we got? In terms of our journal, open up the journal. September is still pending because I'm still in this trade for gold, so I can't wrap up September until either I get stopped out. So we're still pending September's readings. We have taken most of it out anyways with 3.4R, so at the minimum it's going to be a 3.4R trade for the month. But that's that. October, we did take that partial in October, so this one here on the 1st of October, so we're gonna have to wait for that to see if that's a loss or a win. So September was another green month. You can see when I started trading fundamentals in June, green, 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 green. So 4 months of green, 4 months consistent. You can see trade wise I've only taken 3 trades per month. If anything, that was an add-on. No, if anything, that's the same trade. So that's 1 trade, 2 trade, 3 and 3. So consistent, guys, right? So yeah, like I said, this is going to be the last video on this channel. I'll probably upload this video onto my new channel as well, K1 Trading Official. I'm going to be uploading a bit more, I guess you could say, advice now. And then, like I said, for the rest of the year, we'll trade $300 per trade. We'll increase it next year if I can still be profitable by the end of the year. We'll increase it to around 500 USD, which should be around 700-ish AUD per trade. And then you guys will have a look and see everything, how I do. This setup as well, editing, videos, all that sort of stuff, I'm going to slowly upgrade over time. So hopefully we get a better mic. Still filming on my phone. We'll see if we can upgrade the phone. But yeah, stay tuned, guys.